Ring, ring, ring. Hello, simps and lovely virgins.
Not what we talked about.
It is me, a man on a wig.
That is true.
And welcome back to Krown's magical, serious, magic internet money cave.
Welcome back to the Krown Crypto channel. Wishing you a happy, healthy start to this nice Tuesday. It is Tuesday. We actually got some big events coming in today as well. Want to be wishing you the best as always. And of course, a clear warning that today is PPI day. So markets very likely do move on that information. So I want to be checking in on Dixie chart today, following up on that analysis of we were looking at reversals over the past month. We've gotten that reversal. The question is when bounce and how does that affect the other assets that we look at? And then of course, follow up on Bitcoin as well. Other than that, I think let's just jump right on into it, starting off with the Dixie chart. So first and foremost, we were looking at a reversal on Dixie on the higher term timeframes based off of two extremes on volatility, followed by momentum oscillators printing 4 drives of bearish divergence right here, plus the weekly jewel giving off a really good sell signal in early/mid-October. Now, the overall target for this first portion of the move was somewhere around about $1.05, maybe even as low as about $1.04. We are getting very close to that right now. And seeing as PPI data is coming out later today, I suspect that we're going to get, the totality of this move in the short term and then very likely set up for a bounce. So anywhere within this zone right here, I probably would be looking for a bounce in the short term. Does that mean that it continues on with the downside? Probably yes, but do be aware that there very likely is a bounce coming in here in the not so distant future, which does imply that when it does bounce, you're probably going to see an inverse relationship to most risk on assets as we do observe on the higher term timeframes. So again, that data will be coming in later today, and when it does bounce, probably going to see, some maybe some continuations on risk on assets. Other than that, I wanted to also address a couple other situations. So if you see on the right hand side over here, or actually you can't see on the right hand side, but what I do want to actually, what we can do, we can go over to my Twitter because I made a post about it over here. But basically, CME Futures right now are trading at about a $300 discount to spot. We're about halfway through now, a little bit more than halfway through, I think, the month of November in terms of trading days. And so this provides an interesting dynamic because what people can do, what especially professionals can do, is that they can essentially long the futures contracts at a discount and then short or sell the spot Bitcoin or contracts, for what they're worth and lock in the difference and do the cash and carry trade if they can hold it into the end of the month, locking in that $300 difference. Now, it's a little more complicated than that, obviously, but you get the idea. It's a form of arbitrage here. So here's the thing. What does that essentially imply as we kind of get closer and closer to expiration at the end of the month? Well, if we know that futures are marked to spots value at the end of the month on expiration, then we can assume that very likely that's going to drive up price coming in closer to the end of the month. So probably is getting ready for another bear market rally relatively soon, let's say. So that is a dynamic to be aware of here. Anyways, now going back into the actual Bitcoin charts, I want to go on to the short-term timeframes before we get into the short-term timeframes for Bitcoin, I want to once again state the very important pivot levels for myself, and maybe some other people would agree with this out there as well, for actually calling an end to the overall bearish control on this asset. This is for CME prices, by the way, to be very abundantly clear, but basically it would be with either one of two things: a daily closure above 18,500 or so, or a weekly closure above 18,000 even. If one of those two things happens, that's where I say bears are no longer in control. Expect a greater bear market rally, probably into the $20,000 territory, maybe even a little bit more into the end of the year. Until that happens, though, this is all just hopium, essentially, as we've kind of gone over. So first and foremost, on the weekly, we already know about this hidden bearish divergence, but I don't really want to speak about the weekly today because we've already covered that before. But I want to go back onto the short-term timeframes over here. And yesterday, I was wrong. I was very wrong. It's embarrassingly wrong, as I was looking at a closure below 16,400 as confirming a local high, thus another lower high, thus hidden bearish divergence, thus another drive towards the bottom side of the range. To be fair, we did get a drive to the bottom side of the range, but no break below the range. So I was definitely wrong about that. But here's the thing: we do have another setup today, to be fair. So here's the thing. Coming into today's event, there can obviously be an extension of this rally, of course, and we'll talk about what sort of criteria would essentially benefit that. But here is a continuation of the short-term time frame analysis. 4-hour volatility continues to contract. So we are looking at a corrective move here, corrective within the context of the current trend. is to the upside. On top of that, if we go and reference stochastic momentum, let's see where the pivots are. 12-hour time frame on CME. So understand that we're talking specifically about CME here, not spot price action, which do have different prices. CME 12-hour pivot is at 16,850, currently trading about $350 below that region, with about 10 and a half hours left to closure. So not really anytime soon, to be fair. 6-hour time frame is going to be showing a pivot at the loading screen. No, it's going to be at $16,000. Again, currently trading $500 above that pivot, so do keep that number in mind. We're going to come back to it later, but momentum will turn back onto the downside with a closure below 16,000 even, or so a little bit below that, to be fair. 4-hour time frame is going to be showing upside until Bitcoin closes below 15,900, so very close to the 6-hour here. But for now, upside momentum alongside the other time frames, and we also can see on the hourly time frame that it is going to be showing upside momentum as long as Bitcoin is above the loading screen as well. Come on, baby, show it to me. Show it to me. Show it to me. Can you show it to me? Show me your loading screen. Yeah, unfortunately, the thing about this place that we're at, it's beautiful, but the internet fucking sucks. The internet fucking sucks here. Yes, the hourly is going to be showing a downside pivot below 16,530. Currently, CME trading about $35 below there with, I don't know, another 30 minutes left to go until the closure. So, we are seeing bifurcation in lower term timeframes. That tells me that, we can very easily see a continuation of this short-term rally. What would I be looking at in terms of, short-term timeframe ranges here? Well, range lows would be below. There we go. Range lows would be below about 15,900, even on an hourly closure, and range highs would be about 16,950, again on an hourly closure. A closure above range highs, and I'd be looking for the rally to continue, probably somewhere between 17.5, maybe even as much as $18,000. That obviously put Boo Laws in a position to, continue on with the rally significantly more. And to the downside, that would do a lot of things. If Bitcoin were to come back down and close an hourly below the bottom side of the range, that will confirm hidden bearish divergence on as high of a time frame as a 4-hour right here, as Bitcoin continues to make higher highs on 4-hour RSI, and that would imply yet another move back down to the range lows. For CME, that would be basically low $15,000 territory and would put it in a precarious position to actually break those range lows, obviously. I would expect something like that to happen only if PPI data comes out and disappoints, essentially. And at that point, we can start to look at the 2-day time frame analysis that we've been looking at for the past few weeks here as very much relevant. But until then, I wanted to speak about it's not necessarily a new chart, but just something a little bit different here, as we haven't really spoken about it too much. Let me just reference my notes. Yep, okay, we got all of that. Beautiful. Which is right here, the 5-day chart, because this one is brewing a signal. It won't be closing today, but it does close tomorrow night. And this one is specific for spot price action, not CME. So in this case, we are looking at 5-day extreme lows on volatility. Now, to put this into context, we have not seen lows like this. We have not seen extreme contraction like this basically since July of 2020, before the mega macro breakout from about $10,000 to like $65,000. And over the past 4 to 5 years now, whenever we've seen expansion phases from these extreme lows, it's led to an average move of over 42% over the course of about 37 days. And we have seen a first standard deviation range between about 35.25% all the way to 49.5%. The reason why this one is relevant right now is because this one will be closing tomorrow night, not tonight, but tomorrow night. And if it does close below the momentum pivot here on the 5-day stochastic oscillator, which is 16,800, risk will once again turn on to the downside. And it kind of tells me that in the short term here, how high does Bitcoin get? I mean, I think best case scenario would be $18,000. Again, be aware of the order of operations in the short-term timeframes. Obviously, worst case scenario is that it puts in a local high right here and just continues on to the downside. Personally speaking, I do think that risk is to the downside, obviously because of the 2-day timeframe chart. Nothing's really changed there. Or at least I suspect that nothing's really changed there. In fact, we should go look at the 2-day momentum pivot because I haven't done that today. But if we get the 5-day on the same side as the 2-day time frame, then it's probably going to indicate the next leg down starting. And the areas of interest to the downside are still going to be somewhere around low $13,000 territory and then low $11,000 to upper $10,000 territory. Okay. So the 2-day time frame stochastic pivot is at 20,400, and that one's actually closing tonight. So risk very likely does still remain to the downside here. on the 2-day. So again, personally speaking, I'd say that puts Bitcoin in a much more, weak position than not. But in the short term, can Bitcoin continue on with the rally? Definitely possible. Understand where those sort of range resolutions happen, as the higher term timeframes will obviously supersede the lower term timeframes. But you can see how the lower term timeframes play into the higher term timeframes. Anyways. All right, we're about 10 minutes into this video. I think that's a good place to wrap this one off. What else do I want to say? Yes, I want to once again issue, it's not like issue, it sounds so lofty, but what I'm trying to say is that I want to talk about some ways that you can, hopefully keep yourself safe, referencing the FTX situation. So obviously, in my opinion, the safest way to be storing crypto assets is on a cold storage wallet, like a Ledger, like a Trezor, these sorts of things that are off an exchange and onto like basically USB drive, kind of. Now, if you are intent on trading, then you obviously have to have some sort of funds on exchanges. And in this case, again, I'm not a financial advisor, can't tell you what to do with your money, but I can say that this is one of the advantages of using leverage, because you can put a small amount onto exchange, something that you're actually comfortable with losing, assuming that you're comfortable at all, and basically leverage that in order to cover your full stack, which you keep off the exchange, because there's really no reason to risk more than you really need to. So do be aware of that. These are very simple ways that you can kind of cover yourself, and yeah, that's a decision for you to make, of course, on your own. Of course, I also want to say that when it comes to exchanges, do be aware that until exchanges post proof of reserves and proof of liabilities through Merkle tree analysis, which is analysis done on the blockchain for those, then, still a question mark who's legit, who's not legit. I do happen to know through my Bybit rep that they are working on that. It's going to be hopefully as soon as possible. And in the meantime, they are offering a promotion because, well, they basically want to scoop up all the FTX people, which they're offering $30,000 in deposit bonus. Now, that comes with a lot of fine writing. Obviously, you need to deposit a lot and then trade a lot there. But yeah, they will reward you with that, or up to that, I should say. And then also 0% on maker fees, not taker fees, but maker fees for both spot and derivative contracts. Again, with the link in the description below. I want to full-heartedly say, however, understand that's an affiliate link. And also, if you're not comfortable with it, don't fucking use it. Just don't do it. Just don't do it. It's that simple. All right, sweet. So that's a good place for me to be leaving off. I want to be wishing you well yet again. Take care, much love, and see you hopefully soon.